Welcome to the Black Heart Red Spade podcast. This podcast features long-form conversations with accomplished guests from across the globe on topics ranging from financial markets and trading to psychology, entrepreneurship, and life in general, with your host, Adrian Alberts. Derivatives trading carries significant risk of capital losses and is not suitable for all investors. Past performance is not indicative of future results. All views aired by participants are their own and intended for informative and educational purposes only. Always consult with a registered financial or legal advisor before acting on any topics discussed. My guest today is Ayesha Tariq, who is the co-founder of Traderade, and she's a CFA and has multiple years of market experience. We got to know one another a bit via Twitter, and we also have mutual friends, Mayhem, who I spoke with last week, and also Rocco Stradom, who's the founder of SGM Podcast. So I'm very glad to have you here, Ayesha. Thank you so much for giving me the time, and I very much look forward to learning from you today. So.
Sure. Thank you, Adrian. Thank you so much for having me on. I mean, it's been really fun interacting with you on Twitter. I've seen you around. I've heard about you from Rocco as well. And it's great to be on the show.
No, thank you. It's really a pleasure to engage with people who look at the world differently. And I can tell when, looking at your tweets and having engaged with you, that you also look at the world in a slightly different way. You don't just get caught up in narratives posted by what's that paper, Wall Street Journal. I remember that one that I commented on about the whole bull market getting started, and I'm sure over the course of your career you've seen many of these kind of things, developing, a headline and so. But before we even get into that, how did you enter the world of markets? I mean, we all have our stories, so I'm curious to hear yours.
Well, it's not a very exciting story. It was, I graduated and I took a job in a bank, and that's that. But just to take a step back. So after I graduated, there was this fantastic program from Standard Chartered Bank, which, had people going all over the world. And, it was a special program for graduates. And while I never wanted to join banking, I didn't even study finance. I studied marketing. But this seemed like, oh, there you go. But it seemed like such an exciting job, and it seemed special. So I applied, I got in, and it really was. It was special. It gave me my start in the financial world, which at the time I thought was super boring. But luckily, they placed me in corporate banking. So what we were doing is we were banking mid to large corporates. I was in local corporates, so I looked at only local clients, homegrown clients, which in itself was extremely exciting because it taught me to look at businesses who were just growing. It taught me to look at entrepreneurs. And it taught me to look at a variety of industries, particularly homegrown ones, right? Which is super exciting. You look at manufacturing facilities, you look at trading facilities, you look at a variety of things. So I've been to so many factories, and I've looked at so many goods in every stage of the manufacturing process that just really excited me. And then, of course, was the story of the entrepreneur, how he starts off and, he needs a little bit of help from the bank, and then he needs a little bit more. And, how the business one day becomes a huge conglomerate and finally a huge listed company. So once I actually started with corporate banking, I think 6 months into my job, I fell in love with the role. I fell in love with learning about companies and industries and how they operate and what they do. And then I realized that, what? Cash is at the heart of every business. And therefore, understanding how a balance sheet works or how an income statement works. And I'm not talking about constructing it, but really actually, let's say, deconstructing it, right? And really analyzing and understanding how each of the pieces fit in. So that's how I got my start. And I stayed in corporate banking for a good number of years, almost 12, 13 years. Thereafter, I moved to a local company in Dubai, or rather in the UAE. So we were between Abu Dhabi and Dubai. Um, he was a local entrepreneur here, but a very big business, obviously, more like a conglomerate. We managed real estate and hospitality. So that's where I started managing equities. So his portfolio of equities and his assets, we looked at private investments, we looked at private equity, various things. I mean, I was basically the head of treasury, so to speak, treasury, investments, banking. So I handle that side of it, the corporate finance side of the business. And in fact, when you asked me about getting into markets, when I was working in the bank as a corporate banker, I actually couldn't trade because we weren't allowed to. We used to have a lot of inside information on companies, right? So if we
Yeah, of
did
course.
buy stocks, yeah. So if we did buy equities or we did buy stocks, we would have to hold it for a certain period. And that just made the whole thing just very annoying. And there was a lot of reporting and all of that. So while I did follow the markets, I really didn't trade myself. I couldn't. So my real trading came alongside my boss at the time, let's say, as I managed his portfolio, and that's when I started trading as well. And yeah, I never stopped ever since. So that was sometime around 2016, so not very long ago in terms of actual trading. But I've been in the markets or in the financial markets since 2004, so a good 18, 19 years now.
Yeah,
So
that's
that's my background.
no,
Sorry.
no. It's just remarkable listening to your story and how you also got started. Because, I mean, I look at myself and I studied marketing, and quite honestly, when I got into the world of finance, I didn't have a clue about a lot of things. I literally didn't even know what spread was, and that, I mean, it seems so basic if you look at it now, but coming
Mhm.
from a non-financial background, a lot of the terms that we use in finance don't make a lot of sense to people. And I can see why the world of finance, even though it's very exciting to us, I can see why people who are not in the industry would deem it as boring, because they think we just look at figures all day and, as you said, construct or deconstruct balance sheets, or how exciting can it be watching a market going up and down. But I think that if listeners had to hear your story like this and how you got into it and learn about the proverbial value chain, from starting at the bottom and working it all the way to the top, they can see that the world of finance is incorporated into everything that we do. And that's what I
Yes.
love about this field.
Yes, I think a lot of that perception has changed since the great financial crisis,
Mm.
because that sort of brought to light, the world of finance when we used to say the bankers broke the world, right?
Yeah,
And we
yeah,
did, unfortunately. I think after the great financial crisis in 2008, 2009, we were more hated than lawyers even.
oh yeah, yeah.
We had targets on our backs, so it wasn't a very fun job to be in at the time. But at the same time, I think it was a very important job to be in, because that was the time when companies needed the most help.
Yeah.
Whether we created it in the first place or not, it was the time when they needed the most support. And I was very privileged to work for Standard Chartered at the time, because they were one of the few banks who were quite untouched by the crisis, because their footprint was not the US or Europe. So
Oh, that's
we had
fortunate.
that was very fortunate. And so we had a lot of capital, and we could actually lend out and support a lot of clients at the time. So it was, I would say I got very lucky. I was at the right place at the right time.
Yeah, it does help. It's funny you mentioned that about them not having exposure to the US or to Europe. Here in South Africa, our banks also had to adhere to the new Credit Act that was implemented literally a few months before the whole 2008, or actually about a year beforehand. So people couldn't just take out loans ad nauseum to the point and leverage themselves to the hilt. So I think that's what saved us over here and created a very similar situation where the banks were at least very well capitalized, as opposed to being in the JP Morgan, Lehman, Citibank, and all those situations where they had to get bailed out. But we were this close to a proper calamity, like literally that close. So hopefully we won't get there anytime soon, or again. Well, mind you, I think we will at some point. We probably will. You know, it's human nature. We can't help ourselves. But you know, leading into that, what are your thoughts on today's inflation figures that came out? I mean, we were actually talking about it beforehand. Funny enough.
Agreed. It's very interesting, actually. I mean, if you ask me, I honestly thought shelter would come down a little bit. I mean, we've been hearing about the housing market coming down, and I've been tracking the figures as well. I'm sure you see it on Twitter. But I think one thing that I haven't tracked very closely was the rentals. And a couple of weeks ago, I actually saw some figures about rentals going up in certain areas because people were more keen on. So if you're not going to buy a house, you're going to have to rent, right? And then there was also the issue that a lot of people were moving back to the cities for work. So a lot of those rentals were also going up. So you see the banks calling people back to work. You see the big tech companies calling people back to work. So I think that's something that I should have kept a closer eye on, and that would have given us like a better reading of the inflation figure. In terms of food, however, I was quite sure it's going up. I knew that energy would come down, but I also thought, so for me, the wild card, let's say, was shelter here. I really did think it would come down a little bit, and that would sort of bring like the inflation figures down, not by a lot, but just at least, you know, a bit. And as I told you, I thought it would be softer. I didn't think it would come down, right? So yeah, it took me a little bit by surprise as well. But having said that, look, I think something that I was saying even before, and I should have probably just, you know, listened to myself. Sometimes I don't. Is that shelter and food inflation is always upward sticky.
Yeah, that's true.
What we see in terms of food inflation is it's still increasing. So it's not just staying where it is, it's actually increasing. And this just goes to show that inflation hasn't worked its way out of the system as yet, right? So even if it's upward sticky, it should stop at some point, but we're still accelerating instead of decelerating, which is not a very good thing. It's not a good sign. It means that we still have some ways to go before we see a meaningful decrease in the inflation numbers.
Yeah, and that's something that we can't do without food and shelter, especially. You know, it's many of us don't have cars, so you can sort of get away from the whole energy thing, like petrol bills or gas bills, as they would say in America. But food and shelter, nah, you can't skip on that.
Absolutely. And I think this in turn causes pressure, buying pressure on other industries, right? So something that I've been talking a lot about is retail and apparel. Okay, so apparel being the worst of the retail, but retail itself, as in goods inflation, people not spending on goods, right? Because you're spending so much on groceries, you're spending so much on your basic necessities that you actually don't have any space for discretionary spending. And I think this is going to cause a pocket of, let's say, so what we'll see is recessionary pockets before the recession sort of you know, spreads all across. So while we still have inflation in these areas, spending will slow down considerably and demand is being destroyed considerably in other areas, right? Until this starts to flow into, you know, across the market. So the way I see it, I already think that we are in a recession. I already
agree.
think that
I agree with you there.
and it's not just the US. I think it's across the globe. Um, but I think it just gets worse from here, unfortunately. I'm not trying to be a dampener
No, no, no,
or
no, no,
anything,
no, no, far from
but
it. Far from it.
let's call a spade, right?
100% agree with you. It's our job to be able to call a spade a spade. You know, it's as simple as that. And it's like what I was saying to Mayhem last week, that just because we call out certain things doesn't mean we are pessimistic or negative people. You know, far from it. But it's better by far to embrace a hard truth than comforting fables, as the great Carl Sagan would say. And I fully adhere to that. And I think that's a very good way of looking at markets and trading, because it doesn't help that you hold on to these fables of things going well when they clearly aren't, you know, and vice versa. You know, some people crave the whole
Great.
collapse thing because somehow they want to be correct about seeing a market collapse so that they can say, ha, I told you so. But that's also a fable that I wouldn't hold on to if the narrative or the facts don't justify it.
No, I agree. And I mean, I always say it's better to know than not know. So I'd rather hear the bad news than, dig my head in the sand and pretend that everything's okay. Um, Speaking of Carl Sagan, he's one of my favorites, by
Oh,
the way. I
really?
have
You're
all
also a
his
fan?
books here.
He's so fantastic. I grew up watching Cosmos, and I enjoyed watching the one with Neil deGrasse Tyson,
Yeah,
because
yeah,
my dad was also a massive Carl Sagan fan. That's how I got to learn about all his well, not all of his stuff, but a lot of his stuff. So
yeah.
yeah,
I love him. I have all his books. I managed to get a hold of most of them, so I'm very happy.
it's not easy reading material. I mean, Carl Sagan was a very, very smart guy, you know, so he definitely knew his stuff, that's for sure.
It's not easy, but I find him very enjoyable. I find him
Mm.
very deep, and I don't know. I think, he's one of the few people who actually made science popular.
Yeah, I think so too. Yeah.
Him and so I really I enjoy. I like him a lot.
Yeah, excellent taste there. I often draw wisdom from these people from other parts of life too, you know, because I've said for a while that I don't think markets are so separate from humanity. I think markets form a big part of humanity. Because what is trading after all? If we really boil down to it, it's an auction. Everything
Yeah.
in life is essentially an auction. So whether you're buying and selling shares, or whether you're buying and selling bread, or uh, whatever commodity or service you can think of, we are all auctioning. You know, everything is an auction. Even when you form a friendship or a relationship with someone, it's kind of an auction. You are auctioning until you match. I know it sounds very, very clinical when I put it that way, but at the crux of it, we kind of are doing that.
You know what? Surprisingly, I get you, and I completely agree. It is like that, right? So it's always just like the meeting of the minds, and so
Yeah.
when you're trading as well, it's a very similar thing, and it's where the minds are going, where the majority of people are going. So yeah, I completely agree with you. It's an interesting way of putting it, but you're bang
Yeah.
on.
And we can even say that an auction is a negotiation. I'm not happy with that price, but I'm happy with that price. And everything in life is also a negotiation. And that's why I often use the phrase, we're not simply trading markets, we are negotiating our way through markets. You know, we are looking at we are negotiating with ourselves, you know, in terms of our biases that we
Mhm.
have. We are negotiating with what the market is presenting us, and we're also negotiating with other people whom we interact with. You know, so that's, I think that's what makes this game so tricky, because our own biases can so easily hamper our own performance, and it's so easy to get stuck in a certain view because, let's face it, it's addictive. It's so addictive.
Absolutely. Absolutely. And I think the worst part is for many of us, we do understand what is going on, but we don't always listen to ourselves. Just as I was telling you just now. I mean,
Mm.
I have been saying that shelter is upward sticky, yet it took me by surprise. I mean, and had I taken my own advice and tracked the numbers, I probably would have seen this coming. You know what I mean?
I know.
So it's even so, even when you're trading or when you're looking at the markets, even though you know something and you know something to be true intellectually, or but you do the opposite because you're not always thinking straight. And I think conquering your biases is one of the most difficult things to do when trading a market.
Well, even Daniel Kahneman would say that we cannot fully conquer our biases. We can only be aware of them at best and hopefully fall for them less frequently. But to say we can conquer them, it's almost like, well, it's a fallacy to believe that we can, because we are still human. I read this book quite recently called The Hour Between Dog and Wolf by John Coates. Have you read it by any chance?
I haven't, no.
Fantastic book, highly, highly, highly recommended. And one of the things that Coates also pointed out, though, is that no matter what we do or who we are, or how well educated or how well experienced, we still are susceptible to our physiological drivers. In other words, our hormones, the testosterone that rages when you're on a winning trade, the cortisol that kicks in when you're in a losing trade. It's like bear markets are fueled by testosterone, and bull markets are fueled
Bull
by
markets, yeah.
bull markets are fueled by testosterone, and bear markets are fueled by cortisol. And that, if we really look at that kind of crux, it's so easy to fall prey to these hormones. And he goes into so much detail about what actually happens in your body. Like, there are examples where he would use an experienced trader versus someone who's inexperienced, and then he would say, while he's looking at the numbers, these hormones are being kicked in. His vagus nerve is, it's fascinating. And when I read that, I thought to myself, wow, now I have a good idea of what's happening inside me when I am looking at markets. And when you have a better idea what's happening inside yourself, I think that, I don't want to say it gives you an edge, but at least it gives you a better understanding of how you respond to the markets.
Absolutely. I think you can mitigate some of the negatives. You're right. We can't ever conquer it completely, but we can sort of take steps to make sure that we don't do the worst, let's say. And the other thing is probably let it, interfere with our lives in general, right? So a lot of the times I've noticed, or it's happened to me, it's probably happened to you, it's happened to all of us, that if we're having a bad day in the market, we turn out to be very grumpy, not just with, the market, but with people around us, right? See? And no, and I do it. It's normal. We're human, as you said. I mean, and one side of your life will always permeate into other parts of your life, and it's just a matter of making sure that you don't do that, right? And while you can't do it 100%, I think if we can recognize the behaviors that we display or the way we feel, I think it's easier to mitigate the circumstances.
Self-management is very, very tough. And I think one of the most overlooked factors of, never mind just trading, just finance in general, and life in general, I think, because it's hard enough to manage yourself as it is, because we have so many facets to ourselves that we don't even know that we have. Another fascinating book that I also read was Ray Dalio's Principles. Now, I know I called him out a little bit in my previous podcast for the fun of it, because and the reason why I do that, though, is because Ray himself was a guy who said that, don't believe everything anyone says, not even me. And as the author of a book, to say that, I cannot help but respect that. It's incredibly respect-worthy if someone is that self-aware to acknowledge that even they make mistakes and that they are not always as believable. And as I learned more about these things, I've seen time and time again, even how self-aware people such as Dalio are still susceptible to areas where they made mistakes in the past. Now, and I'm looking at myself here too, by the way, I'm not pointing any fingers. But like, for example, during a TED talk that he did, he pointed out that he went on national TV in the 80s and said that he knew with absolute certainty how markets worked, and that he could say what was going to happen, and then he got his ass handed to him proverbially, and he did the same kind of thing but in a different way on three separate occasions. And I saved myself money by not listening to that, because I thought, Ray, this is not your strong point. Don't do that. And the point that I'm trying to make with that is that I've become aware of where I do that. And where I make that mistake a lot is that as soon as I start feeling, nah, I'm good again, like this is, I'm feeling in the zone. I feel like I can do no wrong. That is when I need to get out of the market and reassess and reevaluate.
For me, it's a little bit, let's say, revenge trading. I do a little bit of that, and that's not very good.
Oh, that's such a common thing to do, though, because I've fallen prey to that how many times, and still do in some way or form. I still do. But I think hindsight bias is one of the big ones that actually catches us, especially in trading, especially that whole, I knew it. Did we?
No, you didn't. I actually tend not to do that as much. I mean, I beat myself up that I should have known it, because I don't know, maybe it's got to do with, my experience, my banking background, but there are things you see and there are things you can't see. And don't say that you knew it. If you knew it, you would have done something about it.
Absolutely agree. I don't know if you're a Lord of the Rings fan, but as Gandalf even said, big Lord of the Rings fan, by the way. Yeah. Horse would actually enjoy this, since he's Michigan Dolph and all that. But as Gandalf said, do not be so quick to deal out death and judgment. Even the very wise cannot see all ends. And I think that's one of the key things that we also always need to keep in mind when we are trading. I don't know if you get this a lot, but people who, well, I don't advertise that I'm a trader, but people who know that I'm a trader often ask me, so what do you predict the markets will do? And I've said, guys, I cannot predict the future any more than what you can. Trust me, I cannot. If I could, I would be a billionaire sitting on my yacht. Exactly. And all of you guys who are my friends, everyone would be like, you'd be sitting and having this conversation with me on a yacht right now, quite honestly. But I cannot predict the future. I can just take a best guess. That's all I am capable of doing.
Absolutely. I mean, this is exactly my answer, man. If I could predict the markets, I'd be a millionaire right now, or billionaire, or trillionaire, whatever. I wouldn't be sitting and talking to you. But no, I think the other way to look at this is, even though people ask these questions, but I think all you can do probably is look at mitigants, have a plan, put steps in place. So if the market goes higher, this is what I'm going to do. If the market goes lower, this is what I'm going to do. And I think a lot of traders behave this way. I don't trade as much. I wouldn't even call myself really a trader per se. I am more of, let's say, what you call swing trader,
That's still a very respectable and difficult form of trading. I would honestly say that.
So I'll look at like the bigger macro picture. I will look at fundamentals, and then I'll take a call. So I'm not really a price momentum trader as other people are. So not that I don't understand it, but I'm not very good at it, let's say. But so I think I like sticking to what I do know, is trying to understand things, exactly what we were talking about earlier today. Then the reason I don't trade crypto is because I've never really fully understood it. So for me, it's like putting money in an investment that you really just don't understand. And
you might as well buy tulips, as far as I'm concerned. You literally might as well.
Well, not really. I mean, if you buy tulips, you'll have pretty flowers.
I love that one. Okay, fair point. I stand corrected.
I understand tulips. I don't understand that. So
no, look, I'm with you. And I'm really glad that you brought crypto up though, because I once tried to explain this to friends of mine who once asked me, so why aren't you in crypto? I said, well, first of all, I am into steady state markets, not herd activity markets. And I said, crypto is a herd activity market. I don't know how to trade herd activity markets, even if my life depended on it. I grew up, when I say grew up, I mean as in evolved as a trader and investor in steady state markets. So for me to go into herd activity would literally be like basting me up in sweet and sour sauce and throwing me to the lions. Literally the equivalent of that. And I'm not going to do that to myself. I'd rather leave that to people who feel that they need to get a thrill out of trading. I don't want a thrill out of trading. I don't trade for thrills. I go on roller coasters. I do other things for that.
I hear you.
So not my thing. There are easier ways to get a thrill that don't cost as much money. Let's put it that way.
Absolutely. And that's the other thing. I mean, if you don't understand it, I guess you can always, if you're a good trader or if you are a person who are really good with charts, I suppose you can trade it. But I don't know. So look, there are so many stocks, so many commodities, so many assets. Why would I need to trade like 2 coins or whatever? I don't know. I guess Bitcoin and Ethereum, those are the only 2 that I know. I mean, I know there are hundreds, but
there are actually over 8,000 by my last count. I couldn't believe it.
Okay.
Yeah.
I guess I haven't been keeping up with the market very well.
No, I just saw this the other day and I was like, there are more crypto coins than what there are stocks on the on the NASDAQ and the US stock exchange. And I thought, how in the heck do you pick the right one? Like literally, how do you pick the right ones among them?
No idea.
No.
I can tell you how to pick a stock, but I can't tell you how to do that.
But Ayesha, I mean, come on, let's also be reasonable over here. At least a stock to do well over time has to generate money. There has to be a reason why people want to buy it. I mean, it's not just based on the greater fool theory. Apple is
pure speculation. Yeah.
Apple is a what, $2.34 trillion company because, well, it generates a lot of profits.
Yes.
What does Bitcoin and Ethereum do on that basis? Nothing. I know Bitcoiners are going to hate me for saying that, but it's just true. I can't think of anything that it really does. It's not a store of value, as we've seen. It's
apparently not. Yeah. No. No, I find it all, and I find it all a little scary as well. I mean, one of the reasons that I tend to stay away from commenting on all of this is because, I know people will just jump on my feed and start saying a lot of things that I don't want to hear. And I really don't want to debate it. I mean, it's not something I'm even remotely interested in. As I told you, I mean, if there's any interest, the interest is in just like making fun of it a little bit, or maybe just having a laugh over it. But to be fair, there's so much in this world to learn. And there's so many stocks to study, so many companies to study, so many markets to study, looking at commodities and the fundamentals of commodities. So there's so much to do in this world, in the world of finance.
I mean, speaking of commodities, you mentioned earlier today you wanted to tell me about the oil market, something that you recently picked up there.
Very interesting. Yes. So basically today, the OPEC report came out. So I was having a look at that, and I try to look at it every month, but sometimes, of course, we don't always have time. But I was looking at it today, and it's been very interesting. I mean, if you look at what's happening in oil right now, so obviously for the last couple of days, it's been going up. But the general theory that I've held on to, and I think a lot of people in the oil industry has held on to, is that oil will go higher. My theory for this, which is the same as everybody else's, is that demand far outweighs supply, right? There's just no two ways about it. And it's not just that supply is limited. because we know it's a limited resource. But at the same time, we don't have enough production capabilities. We don't have enough capex going into pumping the oil that we even have out of the ground, right? So we have that problem over there. But some of the interesting statistics that I was looking at is that we've had a very lean summer, much leaner than we've had in quite a long time. And the estimates for world oil demand is actually being revised downwards. And this is because we are forecasting a big time recession across the globe. Is this going to change the fact that oil prices remain high? I don't think so, because if you look at the supply side, even with a reduction in demand, the supply still isn't enough. And if you still have oil price caps on Russian oil, or you still have hoarding, which many countries are doing right now, I think we still see the price of oil staying high. The other point is keeping the price of oil artificially high. And that's another thing that I've been saying, that the OPEC, they're a cartel, they will behave like a cartel, right? So, and it's in their favor to keep oil prices above $75, $80 a barrel, because it helps them balance their budget.
Of course,
and so
they
they're
will.
going to,
Of course,
and so they're going to continue to do that. And we saw that this time, right? So they cut production a little bit. They didn't need to, but they did, just so that they could bolster oil prices. So it's a very interesting dynamic. And I think even though we're seeing like slight pullbacks, and part of that is also because of the SPR releases. So there's been a lot of release from the SPR, the Strategic Petroleum Reserves.
How much of that do they have left? Do you have any figures on that?
I actually was looking at it. I don't think they have very much left. And
Okay.
they are going to have to replenish that also very soon. And when they do, we're going to have another squeeze on oil. So, yeah. So my view is, I think oil stays above $80 a barrel. I don't think we see it come down below that anytime
Not
soon.
minus 47 again anytime soon.
Oh, no. If anything, I think it's going to go further higher. Probably I think we see it between 85 and 90.
No, I also think so. And the other thing that's also occurred to me is that during the next 2 quarters or so, Q4 of 2022 and Q1 of 23, we're going to see a lot more new ships commissioned into the supply chain again. So the supply chains are going to become a lot less sticky and constrained than what they are. But what do those ships need to run? Oil, diesel, so it's, there'll be more demand for transport. So
but at the same time, there will be more demand for transport. And we also need, I think, so for me, the wild card right now is China. So if you look,
big time.
If you saw the statistics that just came out for China, their exports grew 0% as of their last reading. I think that was like a week ago or 2 weeks ago, something of that sort. So with Chinese exports being not growing and factory closures there, so they have COVID issues, they have the drought issues, they have their property collapsing, their property issues. So with all of this happening, I think production and activity has come down significantly. And part of that is also driving the price of oil down. So what happens when China opens up? And they will open up. Contrary to what people think, they will open up. And I think that's just going to bolster demand big time.
Yeah. I mean, it is a bit of a wild card at the moment, for sure, because we don't really know how this Evergrande mishap is going to turn out, and it does seem as though more property companies are being hit hard by it. And I think what quite a few people don't necessarily realize is that a ginormous percentage of Chinese wealth is tied up in property. I think the last figure that I checked was 29% of
Yes.
Chinese wealth is there, which is significantly higher than, say, in the United States, for example, or many Western countries, where a lot of wealth is tied up in stocks or other forms of investments. So yeah, we're not in Kansas anymore. Let's put it that way.
Agreed. It's the old school way of thinking, right? So, like, even for us back home in the subcontinent, or if you look at even here in the UAE, people like to accumulate property. Property is the only real asset that people think will, appreciate over time. So, whatever people do instead of buying stocks, and in most of these markets where the stock market isn't exactly as transparent, as the US market or the UK market or the European markets. So people think the better option, the easier option is you buy a property, and if you want, you rent it out and you have cash flows. So it's like the best asset to own in that respect. So I think you're absolutely right, because I was reading or listening to something which said as well that in the last 20 years, the reason that the property market in China has ballooned is exactly this, because as people started to get more and more affluent, they did buy stuff, but then they also put a lot of money into the property market. So much so that, developers were selling property off plan.
Yeah.
That's never a good thing. When you start to sell property off plan, that's when things start to go so wrong, because you're basically selling just pieces of paper, um, in the hopes of building. But then when you have a situation like COVID, or you have a slowdown and you can't really build as fast as you were supposed to, it becomes a disaster. And the other part is interest rates going up. And this was
Yes.
something that we saw even in the UAE, because the UAE has a huge property market, right? And they had also sold a lot of properties off plan. So, you budget for a certain amount. And then when rates start to go up like crazy, your budget goes out of whack and you
Yeah,
can't.
because exactly, because people often leverage themselves to the hilt. It's quite amazing for me to see how I don't want to say most people, but in anecdotally, from what I've seen, I think it's human nature to want to buy the best with what you can potentially afford, and I've seen that before. But the problem with leverage is that it only works beautifully when it works in your favor.
Yes.
So when all of a sudden you cannot afford those payments anymore, never go buy a house or a car at the maximal rate that you can afford at that particular level of leverage, because we just don't know what's going to happen. So what you pointed out here is spot on. And I think culturally, I know a little bit about China's culture. It's, for example, a very familial kind of thing, that pride of the family, oh, my son or my daughter is doing very, very well. Look at the house that they've built. Oh, look, mom and dad, I bought you guys a house. But the problem with that is that they often stretch themselves to the limits. And I think this is where the house of cards is starting to collapse a bit.
Yes. And don't forget, so rates going up is such a double whammy. So yes, leverage, as you rightly pointed out, it can be a double-edged sword. It's good for you, and it's bad for you. But when rates start to go up, not only are you hurting because of the leverage, but you're also hurting because property values are coming down, right?
Yes.
It's
So
the
you
same
lose
way.
equity, literally.
Absolutely so. And that's the same thing that happens with stocks, with every asset in the world, because it's valued in the same way. But it hits the property market in a whole different way, right? Because now you have like this massive, hole that you need to fill, but you have no money to fill it with. So you can't sell your property because you've got a loan on it that's like more than the value of the property.
Yeah.
What do you do? It's a scary situation, and this is something as well that's kind of triggered the great financial crisis.
Yeah. No, it's definitely not a fun situation to be in, because as we saw with the great financial crisis, what happened there. I mean, you just need to watch a movie, The Big Short. Okay, I know it's a bit dramatized and all that, but you saw these people taking 5, 6, 7 loans on different condos, or I think they call them condos in the States, but condos or even homes. And I thought, wow, does common sense not tell you that this is a bad idea? Just because you can get something at a reasonably low price doesn't mean that it's a good deal. There's a big difference between a low price and a good deal, don't you think?
Absolutely. Yeah, they started to take out what was called ninja loans, right?
Yes, no
No
income, no
income, no
job.
job.
Yes, I remember those. And the mortgage brokers, when they were asked, so what about income? We don't check that. And I thought, no way. I mean, there's no way I would ever admit that, let alone even follow that approach. But that's what happens when speculation is so rife, isn't it?
And it's unbelievable. I mean, I couldn't believe what I was because I read the book first. So I couldn't believe what I was reading because I heard all of this, yes, but when you actually dig into it, so when you're living it, it's one thing. You're listening to a lot of things on the news, and day by day you see things falling. You see a new headline every day, and but then you take a step back and you actually try to read through what happened, and you try to understand what happened, and it shocked me all over again, that something like this was happening. And by then I was a banker for quite a long time already. And I was like, i I mean, who in their right mind would do this? I mean, why would you do this? There's no bank that I know in the world who would do this, but apparently there were.
Yeah. I think we've actually even seen this in markets too. You look at the post-pandemic era, especially, because I think this has been the single, prior to 2022, this has been the single shortest spurt of rife speculation that I've seen. I mean,
Yes.
we can argue, of course, the merits that the market recovered post 2008. Yes, there was QE and stuff, but we can still argue that companies still bolstered their earnings, they started doing better and so on. So it wasn't as rife, but this was just out of this world, what we've seen. And it's still not over. If you look at the narratives, despite all these falls, it's far from done yet.
And I think this is what, is throwing people like us off, because what we've known about how markets should work or should function no longer applies. It's not how. So this morning, I don't know if you saw it, but I put out a tweet where, the bond market is telling us something, and
I saw that, yeah.
the equity market is doing something totally different. So, but what's very interesting is, and I was discussing this with Mayhem as well yesterday, and we were looking at the bond market and we were looking at the junk bond market, so HYG and JNK. While everything else was going down, these two were going up. And we were saying, what's going on? So it seems okay that the whole world is going to hell and people are buying junk. What's happening? I mean, so there's such a disconnect in the markets. A lot of it is just driven, sorry to say, by the same speculative frenzy that is driving stuff like crypto.
Well,
I
look at Bed
remember,
Bath and Beyond. When was it? Last week, 2 weeks ago, and then last year. What was it? It was last year, right? Time has flown so much. GameStop and AMC. Yeah, wow, that was over a year and a half ago. It just doesn't feel like it. But I mean, the absolute rife speculation. I'm actually surprised that these guys have not been called by the SEC and investigated for collusion. I'm really, really surprised, because let's say a group of banks or hedge funds had colluded together like that, they would be standing trial in front of the Senate or the House at the very least by now for that. So I'm wondering if we're going to see more of that in the future, where eventually, retail investors who collude together are going to be asked to come and testify.
Look, I mean, the thing is, it's crazy, and what's worse is they're playing these markets with options, right? So that's sort of, so you have leverage and you have options on top of that. And I remember when when we used to sort of pitch clients derivative products, or options, or IRSs, or any of these products, we used to have something which was called an appropriateness questionnaire. And it was pretty stringent, wherein you could missell something and you had to make sure that the customer fully understands all the risks and how it works and all of that. And it was very difficult because a lot of the times, and these products made a lot of money for us, but a lot of the times we couldn't sell these products because the customer just wasn't appropriate, or it wasn't appropriate for the customer. Let's put it that way. Um, wherein, whereas here you have everybody playing options like it's a game, and it's really become the gamification of financial markets. So it's pretty interesting,
Totally
but it's
agree.
also pretty scary at the same time.
Of course. And you know what, the thing that I've also realized about options, I mean, I've traded options many times before. I've made money and I've lost money from trading options. But one of the great misconceptions about options is that you can't lose that much.
Yes.
Oh, but you can. Oh, even if you
Yes.
go long volatility, you can still lose a lot of money, because the whole misconception is I can only lose my premium. Yes, you're correct, but take into consideration that roughly 80% or more of options, long options, expire out of the money. So you repeat that same step 5, 6, 7 times over, you blow your account before you even know it. It's very easy to do.
Exactly so. And I remember you saying this on Rocco's podcast. And I remember I was driving when you said, I mean, I was listening to you and I was driving and I was like, he's so right. And people just don't get this. They think my loss is capped at my premium. But it's not always the case, right? I mean, it's not just the premium. I mean, or rather it is, but then, as you said, you can still blow yourself up with that.
And then they go
So,
short volatility because they think, oh, let's generate a premium by selling options. And I
oh,
mean,
that's so
what is one of
scary.
the worst things you can do? Have a naked short position.
Yes.
That's why my friend, I'm very good mates with a guy called Chris Sidiel, who's a really good volatility trader. I actually want to introduce you guys sometime, because he's one of those really awesome people to talk to about this stuff. And he taught me this lesson. He said, if you're long, you want to have two books. If you want to trade options, let's say you feel
Mm-hmm.
that you really want to do this and you've done the work and you understand how it works. You have a book where you're long volatility that is uncapped, but you have a short volatility book that is capped, because statistically speaking, the short vol trade will make money most of the time. But if you have a black swan event, or you have an
It will
outlying
blow
event
up.
that's not necessarily a black swan event, but just an outlying event, and we all both know we cannot quantify outlying events. You want your uncapped long volatility to run, and you want your
Mm-hmm.
short volatility to be capped so that you don't blow up, as you just said. Try and get that concept across to many people and see how far you get, because it just doesn't seem to stick, if you see where I'm coming from with that.
No,
Don't know why.
absolutely. And I don't know. But so I guess it all comes down to the same thing, that uh, while everybody thinks that playing options is very easy,
Or
it's
safe.
not. Or safe, it's not. I think there are many more layers to it than people actually proclaim to understand. And they look at it as numbers on a app or whatever, and they're calling deltas and gammas and thetas, but you know I don't think all everybody who proclaims to be an options expert is really an expert.
Mm.
And maybe they're playing with really small amounts, so it really doesn't make a dent, doesn't make a difference. But so if you're paying millions in premium,
Yeah.
then you realize that it does make a difference. And I've done that. So you have to be very sure about what you're doing.
Oh yeah. Oh
if you're
yeah.
paying millions in premium.
And one of the things that has happened to me numerous times, and I'm happy to talk about my losses too, is that I've been directionally correct, but the volatility dropped. So I got Vega crushed on a number of occasions. Even if you buy a call option, say at the bottom of a range, but your Vega is at its highest, that thing can move up. But because the Vega keeps dropping so rapidly, what you're gaining on the delta end, you're actually losing on the Vega end. So you might
On the
actually
Vega,
find,
yeah.
why am I losing money here? You know, it's moving in the right direction. And that
Correct.
is so easy. It's such an easy
And the
trap to
same
fall
thing
into.
happens with theta as
Yeah,
well. And
yeah.
so there are various things to consider. And I think people need to look at this a little bit more in detail. Before. I'm not saying don't play options, but you, what I would
Do the
say is
work.
look at it. Yes, look at it in more details, and make sure that your position sizes are smaller, or you don't, because the moment people make like $1,000 in one go, they're like, oh, it's so easy to make money. It is, and then again, it's not. It's also very easy to lose money in the same vein,
You know, I'm laughing now because I can't help thinking of something where when was this? Oh, it was a video that I actually watched where a trader was asked by the interviewer, can you describe what it's like to be a trader? He said, well, trading isn't an easy way to make money, but it's a very easy way to lose money. I thought,
It's right.
it's so true
It's
though.
right. And the best traders I know, they will always admit that they're losing money. I mean, for them, it's all about probabilities, right? So we lose some, we win some. On the whole, do we come out positive? That's how I say I've had a good day.
Yeah, yeah. But it's about playing the
So
odds. It is about playing the odds all the time, though.
exactly. And I love people like that who can admit that that's how it's done. You sometimes, and sometimes you're just off. It's not because you're a bad trader, but it's just things don't click.
No, no.
So
I don't
I
think
don't
we
know.
all do well under all circumstances. I just don't
Exactly.
believe that. You know, someone who tells me that they can do well under any given market circumstances, I'm less inclined to believe you.
Absolutely so. I think so. And I guess it ties back into your first point or our first discussion where you actually need to know yourself, understand how best you operate. Because, like for me, for example, after years of dealing with millions and billions and stress and managing other people's money all the time, I actually do better when I'm under pressure. So for me, if I am trading under pressure or if I am having to make a decision under pressure, I actually do better. Versus when I am very happy and I'm all euphoric, I'm more likely to make a mistake then. And this is just how I'm made up. And it's taken me a while to understand this about myself, but it's years of conditioning. I don't know if this is how I was born, but for sure, years of conditioning and the kind of work environment that I have been in has led me to perform much better under pressure
Know thyself.
than when I'm happy.
Yeah, know thyself. You know, so you know what works for you. And I like to use Bruce Lee's quote, adopt what's useful, reject what's useless, and add what is uniquely yours. And that seems to be exactly what you've done over here. You know what works for you, you know what doesn't, and you're adding your own unique twist to it. And that's really, really important.
And I'm still always evolving. And and this is something also to recognize that, with time, with age, with circumstances, people change. We're never the same. I'm definitely not the same person I used to be 10 years ago.
I would have
No
been
way.
worried if you were.
I'd like to think I look pretty much the same, but I'm not the same person.
I'd be very worried if someone said to me, "You're just the same as you were 10 years ago." I'm like, whoa, no, hopefully not.
Yeah. Luckily not, and luckily not for the better. I would like to think that I have evolved over the last 10 years. I think I've become much more calmer. I take time before I make decisions. So it's stuff like that. So, and with every step of the way, none of us are perfect. But
No,
I
please.
think self-reflection, taking a moment to think about why we did what we did or how to do things better, it's never a bad thing. For me, it's so very important, not just to learn about everything in the world, but also to learn about ourselves, like, and people, not just myself,
Mm,
but
mm,
people in general as
totally.
well, because people is what drives the market or anything.
Yeah.
So it's important.
No, but that's one of the reasons why I have such a lot of respect for you, is because you have a Bayesian view on life. You update your worldview as new information comes to the fore, which is surprisingly difficult. Even if you know what it is, it's surprisingly difficult to change your mind and change your views, because views are addictive, as we know. But I think if
Yes.
we can't do that, if we cannot change our minds, and if we cannot change our views when new information comes available or when new skills are acquired, then sorry for you, but you are going to remain stuck, and not in a good way.
Absolutely. I mean, we would all be cave people, right? I mean, if we didn't update our views, we'd be nowhere. We have to keep evolving. I think that's you either evolve, adapt or die, right? So it's like
Darwinian,
that.
yes, very, very
I
Darwinian.
mean, we have to keep learning. And for me, a big part of that evolution or big part of adapting is learning. I think
Mm,
the more I learn, the more knowledge I take in about the world, about circumstances, not just the news, but everything, people's views, what's happening, different pieces of the puzzle. It all helps. Every little bit helps. I
mm.
spend most of my time reading and learning because of this, because it will not just make me better, but hopefully I can help more people with that knowledge. Because I realize not everybody has the same time to do all of that. So one of the reasons that I I joined Traderade as well was to help people that if I could use my knowledge and I could use my time, the time I spent to learn, to help other people, because it's not that they can't do it for themselves. They're very smart people. All these people who join these services, they're smart people. It's just that they have different circumstances. Maybe they're working, maybe they have a full-time job, maybe they have a full family, they have time constraints. So it's just a matter of helping people to fulfill a need when they can't do it themselves.
No, I fully hear you, where you're coming from. And I think that's also what I appreciate about yourself, about Mayhem, uh, Rocco, with what he does, and all the other guys that I know. All the best people I know in this game are very humble. It's not a bunch of showboaters. I don't know anyone in this game personally who's a showboater, for one. I don't know anyone who boasts about their ability to predict markets, or how great they are. Literally not one. And that's how I often tell the difference between the greats and the not so greats, if I can put it that way. And we're all just people at the end of the day. This is a job. This is a
Yes,
game, but it is also a
it is
job.
also a job.
It's
Yes.
primarily a job. So you need to do the work. You need to put the work in and the effort in and all that stuff. It's not just a case of open up an account and all of a sudden you're a trader. It takes a lot more than that. So
So the thing about being humble, just if I could say one thing, the moment you lose your humility and you lose that hunger to learn, and the moment you think that you know everything, that's the day you start to die,
I think
for
so.
me at least. I mean, that's like the worst thing that can happen to you. So if you keep, I think the most important thing in life is, yes, to be humble and to be humble enough to know what you don't know.
Ligometry. I
Yes,
love that concept. Ligometry is one of my favorite things that I learned about.
Yes.
And I talk about it a lot.
And this is exactly what Charlie Munger also talks about, because he loves this concept as well. He says it in a plain way so that we can all quote him, but he has this concept as well, because that's one of the most important ways that we can all teach ourselves, right?
Ayesha, I've had a fantastic time talking to you. I feel like, we can just carry on talking about so many different things. I definitely would like to invite you on again sometime, and we can chat about.
And I'd love to come on.
Thank you. That would be fantastic. Before you go, where can viewers or listeners in this instance to find you?
So obviously on Twitter, and it's my full name together, and you can of course find me on LinkedIn as well. You can find me on our website, but I think if you go to Twitter, you'll find the link to my website, which is traderade.com, where I have 2 other partners, Horse and Mayhem. Of course, everybody knows them. They're more famous than I am.
Oh gosh, funny guys.
They are. They're amazing. Honestly, I mean, I couldn't have hoped to partner with better people. They're such good people, and they're not just funny, but they're good people. They're great at what they do. They're very smart.
Very serious about what they do.
Yes, and just so hardworking as well. So it's all the best qualities, and so I'm so grateful that, I could partner with them.
No, it's fantastic.
So yeah.
If you can work with people whom you actually enjoy working with, then life becomes a massive joy as far as I'm concerned.
Absolutely. And I respect them. I respect what they do. So definitely. That's very important.
No, I've also got a lot of respect for them. I mean, I've only spoken with Mayhem, and we've had a lot of conversations now, so I can only really speak for him. But what an awesome guy, so you're lucky to work with him.
Absolutely.
Ayesha, thank you so much. And I very much look forward to speaking with you again and to posting this. I'm sure that everyone's going to love this interview.
Thank you. And I look forward to the panel discussion, hopefully soon.
Yes.
That should be fun.
I've reached out to one of my friends, and, he's a very, very good macro analyst. I think you guys will enjoy him a lot. Also one of those people who reads about anything and everything, so I very much look forward to introducing Mayhem and yourself to him.
Excellent. That's great. Thank you so much, Adrian.
Anytime,
I love
Ayesha.
being on.
Perfect. I'll speak with you again soon.
Thank you for listening to the Black Heart Red Spade podcast. For more information, please visit our website at www.blackheartredspade.com or follow us on Twitter at BeHeartRSpade.